Thanks, Luke. That was fantastic. Good work. Okay, traders. So you can see there how critically important it is to make sure that when you're developing up your systems, that you've got that good mix of strategies. I mean, I spoke about this before, and it is important. Not only like we just saw a portfolio of a number of traders we've got that are putting their hand up to do the track record. So there's another probably 20 that are starting their track records in January and or next week. So that means that we add another 20 to that list, and we're getting a very, very good spread. Now remember that each of those traders as well, at some point will be trading multiple markets and multiple systems. So it's just a fantastic spread of a risk over the overall portfolio, which Luke touched on. But before we arrive at the point where we've got a system that is good enough to trade not only in our own personal account but also, potentially as to be considered for a track record, what we need to do is we need to develop up the system, and we need to maintain our system, and we call it in our group maintaining your high performance system. So I'm gonna basically, I've been through this presentation a couple of times, so I'm gonna kind of go through it a little bit quicker. If you want me to explain something in a little bit more detail, feel free to type in as I go along, because I'm happy to do that. But basically what we're doing is every time we produce a system where we're looking at different markets, and you saw from the mail out that there's a number of different markets we're going to be looking at this year, just to improve our exposure, to improve our diversification on particularly some of the markets that have got much more volume and liquidity. So it's important to obviously, particularly if you're managing between 1 to 4 mil, you're going to need to have those markets that have got higher liquidity values. So what I'm going to do today is I'm going to walk you through the process of developing and maintaining your high performance system. Now, I'm going to give a definition here shortly of the high performance system, but what we're going to do is we're going to look at, all right, well, once we come up with a strategy or a system that is profitable, how do we manage that system? What model do we use to take it forward? Because we know as traders, and I'm sure many of you will know this already, that it's not good enough just to develop up a system. You can't just develop up a set of settings or rules for your system, apply that to the market, and expect that system to be profitable, going forward. It's not as simple as that. That just doesn't work. So what you need to do as a trader is you need to develop. It's exactly the same as building a structure or putting a foundation together. When you build something and you finish that structure, you still need to maintain that structure to make sure you don't get deterioration. Well, the same thing applies for our system. Once we've got our system set up, we're applying it into the market. The dynamics of the market are so constant that we need to be monitoring our strategy and managing our system to make sure we've got the best settings and we've got the best system going forward. So we're going to explore about 8 different models on how to do that, and we're going to work out, based on our case study, what is the best way to manage our system. Now, there may not be, from the analysis I've done, you might find that traders decide that they potentially like different models, and that's okay. You've just got to find, it's like selecting your trading system, and I spoke about this earlier. You've got to match the system up that suits your style. The other thing is, when you're running a model for managing your system, you need to run a model that you're comfortable with in relation to risk on your portfolio, and that best suits the way in which you trade and the style and the approach you take. So let's get into it as far as the trading system. Now, there's a definition here on Investopedia for a trading system. Obviously, a simple set of rules, parameters that determine your entry and exit point. Now, we would add to that by saying that system trading for us it includes automation. So we want all of our traders, those 100 traders, those professional traders, and even the traders that come through the Pro Trader program and don't want to trade C capital but want to manage their own equity base, we want them to be 100% objective in the way they trade. So have an objective process that they go through. So what that means is that every trader needs to have a system that is 100% automated. We want the entry point, the exit point to be 100% automated. So that takes away, obviously, that discretionary component, because in a managed space, when you're being assessed based on your trading mandate and you have a compliance team, there's absolutely no room for discretionary trading at all. So that's one of the things that we really kind of emphasize in the program. Now, I'm going to use some terms here. I've already used the high performance system. I'll explain that shortly. But the pilot system is one thing that we're going to bandy around here a little bit. So the pilot system refers to the strategy or the settings that we've come up with that have been optimized. So we've identified our best stop, our best target, our best trailing input to come up with a profitable strategy for the market we're going to trade. Now, I've selected a market to do the first case study on, which is the DAX. I've picked the DAX because it is a tough market to run in automation. So I'm going to show you basically what we've come up with. But all we've done is I've looked at my charts. I've basically done a 30-minute I've used a 30-minute time-based chart to find out where the biggest moves are occurring, and I found that between 9 and 10 on most days you're getting some good movement on the DAX. So what I've done is that's the testing period, 9 o'clock to 10 o'clock German exchange time, and all I've basically done is run the system optimization and come up with a preferred stop, target and trailing stop, and that's it. So it's a very, very simple, and we call that a pilot system. So we've got a profitable strategy over a 3-month period. That's our pilot system. So there's been no really extensive optimization or layering or anything like that. We've just come up with our basic settings. So we move across. Now, to determine which market we were going to select as part of our case study, we looked at system specifications on the EUREX, volatility, price. I used the website mypivots.com to have a look at volume and range, and the other website that I would recommend you have a look at is www.seasonalcharts.com. That's a really good website to have a look at what historically has happened on the DAX and where there are patterns in seasonality. So that's another model we're going to explore as we go through this case study. So the high performance system, now this is, once we've developed up our pilot system, our basic settings, the next step is to really improve those settings without over optimizing. So the way we do that in GMT is we say, right, well, we've got our basic settings that are profitable, and you'll see when we go through the data that the high performance system has made just over €10,000 over 3 months, so it's a profitable system. But can we get it to be a little bit better than the €10,000? So what we're going to look at is we're going to look at analysing days of the weeks and the long and short bias, and I'll go into a bit more detail about that in a minute. Now, we use the system performance tracker, which is an indicator we've developed up to do that analysis. So we're specifically drilling down into the days of the week and the longs and shorts. And one of the primary things we're going to focus on here is our average trade net profit. Now, the reason why we're focusing on the average trade net profit is because at the end of the day, that's what determines whether you're making money or not. It's all well and good to have a very, very high net profit on your account, on a system account that you see these performance reports with ridiculously high net profits and the drawdowns are reasonable. But if you have a look at the average trade net profit and that's sitting anywhere below between $30 and $50, if it's less than that, then you're going to really struggle in real time with slippage and cost of trade. So you've got to be careful about that, and this is one of the things that we focus in on, that average trade net profit. So as we go along, these are the models we looked at. So a number of models have been tested in this case study, and they include running the original settings without, so that's the pilot system, running that pilot system without doing any additional optimizing. So from the 1st of October, we did our testing from July, came up with our best settings for the pilot system. Okay, so we run that and we don't change it. So what we're actually going to do is we're testing based on running the pilot system with a circuit breaker and without a circuit breaker. And what I mean by a circuit breaker is every system has a max drawdown. So what most traders do is they determine the value at which they're going to turn their system off. That might be a percentage value, it might be a drawdown value that they come up with, it might be their maximum risk on their system, maximum drawdown on their system, it might be a moving average that they run underneath their equity graph, and as soon as it hits below or touches the moving average or falls below that moving average, they turn the system off. Whatever you use, and I'll explain what we're going to use during this process, you have to have a circuit breaker, because systems eventually will stop working. The market dynamics change, the volume goes out, there's not enough movement, the speculators leave that market, it becomes a market that's not really got a lot of activity. If you're trading a trend trading system, which this case study is based on, you're going to struggle to make money. And if the volatility drops, that's going to be a real issue, because if you're trading a trending market and you need to see big moves or big swings in volatility and there's no movement, you're not going to make any money. So you need to have a circuit breaker. Now, Model 2 was our high performance strategy. So what we've done is we've taken our pilot system and then we drill down and look at the days of the week and the longs and short bias, and we come up with our best settings. So we eliminate some of those poor performing days, and that becomes our high performance strategy. So we'll see how that goes over the 3-month period. Then we had a look at seasonal bias. So if you go to seasonalcharts.com, you'll see that each of the commodities and the indexes and the futures markets has a seasonal chart over a 25-30 year period. That's just an idea of potentially where it's expected that that market may move. There's no guarantee, obviously, and you definitely would not be wanting to base your decisions on the seasonal charts, but it gives you an idea of what potentially could happen based on historical performance. Now, I'm going to do an example of where we just run the system based on seasonal bias. We're also going to look at a daily directional bias, where we use the moving average on a daily chart to filter out our long and shorts, so based on the daily direction. We're going to use optimization as a model, and we'll use a 3-to-1. So what I mean by there is we'll test up a 3 months, and then we'll add a month of live data to come up with our best settings. So we'll use a 3-to-1 ratio as far as our optimization. And then we're also going to use a 1-to-1. So we'll use the most current month and the previous month and the current month that we've traded, and we're going to use that to develop up our stops targets and our stops targets and our trailing stops. So we're going to be optimizing based on 2 levels there, and we'll see how both of those perform. The other one is we're going to look at volatility. So we're going to select a volatility level on the chart where basically the system is either on or off. So there will be an extreme volatility, like extremely high levels of volatility, low levels of volatility, and once our indicator hits those levels of volatility, we'll be turning the system on or off. We'll also use a concept of optimization based on volatility. So when the volatility drops, we'll optimize, and when the volatility increases, we'll optimize our strategy. So it'll be purely based on the volatility of the market. Now, an additional model I've got, 2 additional models I've got that I haven't included in this slide. One will be trading based on the market mode. So if the market's ranging, basically that'll determine whether our system's on, and if the market's breaking out, it'll determine if our system's on as well. So we'll have a market mode model, and then the final one will be the multiple system model. So we'll basically use the market mode to determine which system we trade. So we're starting with a trend trader, but if the volatility drops and we see that happens, then we'll switch to another system, and vice versa. If the volatility picks up during our test period, our sample, then we'll add, say, go back to the cycle, the trend, and if it drops, we'll go to the cycle. So there's a couple of things to consider as part of our modelling. Now, just quickly, obviously we've selected our market, which is the DAX. We've got our profitable settings. We're going to be running a live simulation forward test, which we always should be doing, and every system that we track and trade always has to have a circuit breaker, so it needs to have a point at which we turn it off. Now, the system performance tracker is the indicator we're going to use to determine the value of our profit in our account, and the system performance tracker is the tool we're going to be using to determine the days of the week and the longs and shorts, the profitability of trading those days of the week on our system and the long and short bias. So we're specifically going to be looking at the average trade net profit as part of that process. When we looked at the market that we selected, we looked at things like liquidity, market makers, volatility in range, market movement. We know the DAX is a very volatile market, and we also know that the DAX has a tendency to swing in volatility from high to low ranges of volatility, which makes it a very interesting case study, because once you get extreme swings in volatility, that does have a huge impact on the performance of your system, which you will see. So that's very interesting as well. And we also, so our process is to develop up our pilot system, which I've done, and then put together our high performance system, which I've also done as well, and I'm going to take you through that. So that's our process, and our level. There's 3 levels of monitoring our system. So number 1 is we're tracking our system, taking all trades regardless of what's happening on a day of the week. Now, the second level is looking at the days of the week and just to examine which days of the week are profitable and not profitable. And the third level is breaking down the days of the week and just finding out which days aren't actually making money based on the long or short bias. So just getting a clue as to what potentially we can turn on or off as far as our level 3 analysis. So once we've got our pilot system, we really need to run that continually. So the reason why we run the system continually is because if we turn a day of the week off and it starts making money for some reason, so say for example Friday is traditionally a poor day to trade the DAX, but suddenly between March and June, Friday is becoming the better day to trade, then we want to know that. We want to be able to take advantage of that based on our system. So we need to track every day of the week and keep an eye on how that's performing. So that's part of our process. So keeping that information and making sure we're monitoring that is critical for our performance going forward. Most traders traditionally will have a system that they develop up, and they won't necessarily pay a lot of attention to the dynamics of level 1 and level 2 analysis. So looking at the days of the week and looking at the long and short bias, they will generally just trade the system as a all days trading. But you'll see from the analysis that we do that some days just aren't profitable. Now, for whatever reason, there are certain markets that just there are just not profitable days to be trading. It's a waste of your time, and obviously you're giving away money if you're trading days that aren't profitable. So just a quick snapshot of the DAX. So level 1, initial data sample, the DAX data. It was a pilot system, 3 months of testing. Minimum drawdown was, or maximum drawdown was 2625. Our initial stop on every trade was negative $300, obviously. Therefore, our R multiple was 1R was $300. Our circuit breaker for this system. So when I talk about the circuit breaker, that's the point at which we turn the system off. So the system would be turned off at negative $1,500, so which is a negative 5R. Now the reason why I've selected that value and not 2625 is because the average drawdown during that sample was around $1,200. So I don't want to, if my average drawdown peak to valley is $1,200 and then I've had one extreme drawdown of $2,625, I don't want to be waiting for the system to go through another extreme drawdown. I want to actually cut my losses, turn the system off, and then when it starts to produce profit, I'm going to turn it back on. Now, we're going to talk about this bounce point, the point at which you get back into the system. So, to me, you don't want to be turning the system back on when the system breaks its previous equity high or gets, you're wanting to turn the system in either during during its drawdown, or at a point at which you think that that the system has hit its consecutive losing run. So if its average consecutive losing trades is say 7, and your system's had 6 or 7, then that might be a point at which you can turn your system back on. Now that's something we haven't really explored before, but that's an approach. What we typically do is we want to see the system produce some profitable trades first before we turn the system back on, because there's no guarantee that your system isn't going to make a new max drawdown. So that's the risk you take, obviously, with every strategy you trade. But having knowledge of the market, knowing about the volatility of the market, knowing where the market is going to start giving you opportunity, allows you to be more confident about when you go back into a system and start trading it. So either way, you want to have a point at which you turn your system back on. So for us, in this example, we're going to have a circuit breaker of negative $1,500, and our bounce value will be $900. So let's push on. So you can see here, as I mentioned before, equity high. It should be a decimal point there, but your equity high. So when it hits your R break, which is our circuit breaker, system goes off. So in the first example we're going to go through as far as our models, we're not going to have a circuit breaker for each of the models, but in the second one we are. So I'm going to show you the difference between having a circuit breaker and not having a circuit breaker. So let's continue on. Now the distribution, obviously, now this is an example of how we would look at the days of the week and how we would filter out some of those poor performing days. This isn't specific to the DAX, but this is an example of what we mean by filtering out poor performing days of the week. So you've got Monday, Tuesday, Wednesday, Thursday, Friday, all profitable days except for Friday. So we would weed out Friday as a non-profitable day. So we would basically only be trading 4 days of the week there. And there would be a question mark as to whether we would be trading Tuesday, because that average trade net profit there might not be high enough. So we'll explore that a little bit later. So level 2 analysis continued. So based on our analysis, if we take out Friday, we've got a very profitable strategy, and it increases our overall net profit. So the current system would look like this: trading Monday, Tuesday, Wednesday, Thursday, Friday's off. Now if we then look at a level 3 analysis, and we say, right, well, even though we've had a look at Monday, if we break down Monday's trades between longs and shorts, we see that Monday is very profitable. So there's definitely a long bias on Monday. And if we're taking all short trades on Monday, we haven't made any money for the duration of this system's been running. So why are we trading on the short side on a Monday at the moment? So this is the analysis that we're going to want to do. We're going to want to look at each one of the days of the week to determine, is it profitable for us to be trading every day of the week? And the days that we have selected, can we do some additional filtering to make sure that we're getting the most out of those days? So you can see there that Tuesday shorts, this is how we manage all our systems, Pat. So it'll be futures, forex. So basically it can be crude, the DAX, wheat, the euro yen, any market that we're tracking and trading. You'll typically see, if you analyse your system and go into the detail that we're talking about here, you'll definitely see that particularly the commodity markets, there are days that are not profitable to trade, regardless of regardless of how long you track your system. There will definitely be standout days that you need to address and take out of your strategy. For example, one of the systems we were trading on crude, we've never traded Wednesday at all on crude in that morning session, because it's never been profitable over 2 years. So had we have not done that analysis on days of the week, we would blindly be trading that day, and it's not making any money at all. And it would be covered up in the overall performance of the system. The system's overall performance is good, but on that day, it's very, very poor. So this is why we encourage people to do that analysis. Now, so you can see here that we've got level 1 analysis as our pilot system. So it's the system we've got that is profitable, that's running. Level 2 is the days of the week, and level 3 is days of the week longs versus shorts. So by taking out some of those days and also targeting our longs and shorts, we end up only trading longs Monday, Tuesday, Wednesday, and shorts Thursday. Now, how important is it to continue to track your system? So this then becomes our high performance system. We've done the level 3 analysis. This is our high performance system. It's critically important that we continue to have on our platform the pilot system running, because we still need to know what's happening Thursday, Friday on the long side, and we need to know what's going on the short side on Monday, Tuesday, Wednesday, Friday, because there's opportunities there that are going to change with the dynamics of the market, and we need to know that. So that's why it's important for us to continue to track our system. So let me just get rid of this for a second. I'll just move this over, and I'm going to take you to my charts here now. And actually what I'll do is I'll go into the DAX data. So I have mentioned that we are looking at the DAX as our case study, and I'm just going to bring that up now. And what we're specifically looking at on the DAX is we're looking at, all right, well, what days, we know that our pilot system for the DAX, so our basic pilot system, we ended up with a profit of $10,000 for 3 months of trading, which is pretty good. The trend trader 9 till 10, as I said before, that's a pretty good time slot to be tracking. The average trade net profit $79. That's not bad. It's better. It's above 50, which is what we want. 42% win rate, which is what we'd expect with the trend trader, around 35 to 40, probably no higher than 50. Average trade net profit long side 85, average trade net profit short side 73. So you can see there the distribution of longs and shorts is good on this system. The actual max drawdown is 2625. That's a little bit high based on the profit you've got on the system, isn't it? Because remember, what we're looking for as pro traders is we're looking for a 10 to 1 on our max drawdown to net profit. So we really would like to see that at 26k over 12 months. So 10,000 over, which we could potentially get that value as long as we don't see another maximum drawdown. So that's only a 3-month window. So we're quite within the realms of possibility to get that 26k over 12 months. But we know with the DAX that there are going to be periods of very low volatility, and you need to ready yourself for that, because that's when really you will struggle to make money on using a trending system. So this is where the models come into play. Now, the equity high is 10,162 on our pilot system. Average losing trade, negative 200. Initial risk is 300. So you can see there, by using the dynamic stop and target, even though our initial risk is 300, the distribution of trades has allowed us to get our average losing trade down, which is fantastic. But if we have a look at this system, you'll see that that when we go over to our high performance system, that by taking out some of these, and remember, we're filtering based on our average trade net profit. So if there's a day of the week that is not good enough, so I've got here the average trade net profit and the current drawdown. So to me, my circuit breaker is $1,500. If any of these systems are anywhere near $1,500, I'm turning them off straight away. Like $1,200 for a day of the week, negative 1,200, that's not good enough. And you can see there that if we go through the Monday, average trade net profit for a Monday is $82. That's pretty good. Current drawdown, it's negative 100. Tuesday is $21, not good enough. The drawdown also is very high. So the current drawdown, it's obviously not making money on Tuesdays. The Wednesday there is negative $80. It's down $675. So there's 2 days that we can eliminate straight away in our system. Then we've got Thursday and Friday, typically on the DAX, are very good days to trade. And you can see that by the average trade net profit 122, that's fantastic, and 149 respectively. Then you've got on the short side Mondays negative 112 and Tuesday. So those days have never really been profitable and haven't been making money on the short side Monday, Tuesday, but the long side very good. The short side very good on Wednesday, Thursday. Very high average trade net profit. That's fantastic. And Friday is just on the cusp of being acceptable. So if we turn off Tuesday, Wednesday, and turn off Monday, Tuesday, we end up only trading Monday, Thursday, Friday, and trading Wednesday, Thursday, Friday. And we're giving ourselves the best possible start. Now, obviously, we need to continue to monitor those days to make sure that if there is a change in the performance of those days, we may be adding those to our system. But by doing that, our average trade net profit jumps up from 79 to 143. Our win rate's at 49%. So across the board, we're doing much better. Our drawdown goes from 2625 down to 2037. And it allows us then to obviously have a tighter circuit breaker. But the advantage with that is that we're basically trading a system that is running, that is just basically tracking the best days of the week, which is what we want. So that is one model. So we've now got two models. We've got the pilot system and the high performance system. Two models that we're going to track. We're going to monitor these with a circuit breaker. So we're going to have a value at which we turn the system off, and then we're also going to have monitor them without a circuit breaker. So if we just let them run in the market without doing anything at all to them, and we stuck with these high performance settings and we didn't monitor those on a weekly basis, how would these two systems go? But what we're also going to do is we're going to look at our other models as part of this process. And the first thing we're going to do is we're going to look at volatility. So I'm going to just switch over here to our Dax system, and I'm going to show you what happens with volatility here.